Hello equity traders and welcome to the weekly market report with the market guys. I'm AJ Monty. I'm starting off with the Nasdaq market here in the Qs, ticker symbol QQQ, because Tesla, which trades on the Nasdaq, took a big hit today after Elon Musk announced that they were going to incorporate some drastic cost-cutting measures. Now, in our personal accounts, if you start cutting costs, ultimately that leads to more profits. So the initial knee-jerk reaction by investors, and I'll pull this one up, TSLA is the ticker symbol, you can see that the stock gapped down. Now, I normally don't analyze individual stocks, but because this did affect the Nasdaq market, I'm going to go ahead and give you the whole story. The stock gapped right down to a role reversal support level. This former resistance was broken. It's now support. And if you look at the stochastics, we are seeing a turn to a flat line from a downward direction. Now that is happening on a weekly candle that's showing quite an impressive red candle right there. The other thing that you have to look at is in the CCI. We have a lower low that's much lower than the lows from back here, but the CCI is showing a higher low. So that is a positive divergence in the CCI, and the CCI is even more sensitive to the stochastics. So I'm not making a buy recommendation on Tesla. I'm just pointing something out that is very positive for the Nasdaq. Now, going back to the Nasdaq, you can see the weekly chart is showing a downturn on the stochastics, and the CCI is showing a downturn as well. That's on the weekly chart. If I go to the daily chart, you'll see that we are moving up towards the 20-period moving average, but we're seeing some long shadows above the candle, especially from today. So what does that mean for next week? We did not get back up to test that target number that I had right there at the end of the line, and the 20-period moving average is most likely going to act as resistance. So let me draw this for next week. I think the Nasdaq is going to drop a little bit more before it finds support right here at the lows from last week. So that's the Nasdaq. Now let's hop right to the VIX. Volatility index did move lower like I suggested, but it did not hit my target all the way, and it formed a doji right at the 20-period moving average. So what does that mean for the VIX? A doji and a spinning top is a sign of an indecision. When you have that right at a moving average, the moving average will generally act as support in this case. So I think the VIX could move higher next week. What does that mean for the S&P? Well, if they're inversely related, that means that the S&P could very well go lower. That's the SPY right here. So we see a long shadow above today's candle right here. And on Thursday we had somewhat of a long shadow right there. We did not hit the target. The spiders are looking more bearish than bullish. I think we're going to move right back down to test this support level right there. I'm going to erase that line, and we might draw that next week. We'll have to see. But right now, the markets are looking more bearish than bullish. Believe me, I don't want the markets to go down. I have some long positions that I'm watching very carefully, but the technical signals are telling us more bearish than bullish, so that's the report that's going out this week. If we look at the Russell 2000, this was a red candle, and that red candle shows up after an inverted hammer, or close to an inverted hammer, showed up yesterday. The CCI is starting to go down, telling us there's some downward momentum, and I think that the Russell 2000 early on will start to move lower, just like this, to test support. But here's the catch. Unlike what I forecasted in the Qs and in the VIX, I think the Russell 2000 will get more bullish towards the end of the week. Remember, this is tracking 2,000 stocks. The S&P is tracking 500, and of course the diamonds, which I'm going to get to, are only tracking 30 stocks. So that's my forecast for the Russell 2000. Keep in mind, the futures markets were down before the opening this morning, and then we rallied up with a positive surge from an upbeat consumer sentiment data report. So that is really very interesting because we had mixed signals throughout the day, and even now after the close on this Friday, we're having mixed signals on the major markets. So anything could happen next week, but I'm playing it safe, saying that the Russell 2000 is going to go down to at least test that support level. And then my second part of that is that we could possibly rally towards the end of next week. Next week is the week after options expiration Friday, and Monday next week we're having our open house Q&A session, so make sure that you register for that one. Now finally, the diamonds. Diamonds showed all green except for Monday, and we still had a gap fill. Let me zoom in a little bit more because this is actually positive for the diamonds. We gapped up yesterday on Thursday. Today we filled the gap, and what happens 80% after the market fills a gap? It usually goes up. But with the rest of the market having more negative than positive, I think the diamonds are also going to go a little bit lower early on, and then ultimately we'll get that reversal to trade right back up to that 20-period moving average. So again, mixed signals across the board, but we're going to have to make sure that we're using good risk management disciplines here, because when the markets are confused or we're getting mixed signals like this, anything can happen. So you have to make sure that you're protecting yourself along the way. So that's our weekly market report. Have a great weekend, and hopefully I'll see you on the open house on Monday. Remember, go to the Market Guys website, register, save your seat. The link is right on the front page, and we'll talk to you from 8 to 9 p.m. on Monday the 20th. So have a good one. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.